Hello everyone, welcome to Offices Adda 24/7. This is Aarti and I hope you all are doing good. So if you are also preparing for JIB, CIB or for bank promotion exams, remember this is one of the very important YouTube channel. So do subscribe it. You can share with your bankers also so that they can get the benefit from this channel. Because in this we are sharing the planning strategies, we are giving the reminders also of your important exams like JIB, CIB. Like currently JIB registrations has been done now. Currently there's CIB registration is going on. So all the updates we are providing you. So if you are a banker, do subscribe it. You can share with your colleagues, friends also, so that they can also can be updated. They can also can be successfully promoted in their banking career. Chaliye. So with this, now let's start this session. As this is your Raftar series, in this we are completing your MCQ as per your exam pattern. Already we have discussed so many MCQs, but today also one of the very important session because today we are going to see lengthy type of questions, okay, which can be asked for 2 marks. So be prepared whenever you are watching AFM. Keep your pen, notepad, and calculator with you. Okay, chali. So let's start this session and try to give me the answers as much as you can. Chali. So this is the first question. So the first question is which of the following statements is correct regarding accounting concepts? Very first option is prepaid expenses are recorded as assets since they provide future economic benefits. Second, capital expenditure is charged to the income statement in the year it is incurred. Third, bad debts written off are considered an operating expense in the profit and loss account. Fourth, contingent liabilities are recorded in the balance sheet as actual liabilities. Then you have four options, both 1 and 3. B, 1, 2, and 4. C, second and 4. And D, all of the above. So these are the four options. Sorry, so tell me which one is the correct option out of the four. In this, you need to select the right statement. Okay, because they want the correct statement from you as per the accounting concepts. So if we read the first option, in this statement, they are saying the prepaid expenses are recorded as assets since they provide future economic benefit. Prepaid expenses means suppose your expense needs to be made during May month. Okay, there is you need to make an expense during May month, but you made advance payment. You made advance payment suppose on 15th April only. So what you did, you made advance payment. Correct. So this is what this is your advance or this is your prepaid expenses. So this is your asset. Correct. Under your balance sheet you're going to show as a asset because in future you are going to receive the benefits. So this is a true statement. Then capital expenditure is in charge to the income statement in the year it is incurred. Sorry. So capital expenditure is charged to the income statement in the year it is incurred. Means remember we have two types of expenditure. One is your revenue expenditure and the next one is your capital expenditure. Now when we talk about revenue expenditure, this is your daily kind of expenses you are doing. Okay. Under capital expenditure, you are purchasing long-term assets. Generally, you are going to receive the benefits for n number of years. So whenever you are incurring capital expenditure, you are going to add in that fixed asset only, in that particular assets only. But in case of revenue expenditures, you are going to charge towards your income statement. That is your profit and loss statement. That is the difference. And your revenue is again recurring nature. Okay, recurring nature means repetitive nature of expenditure is this. But capital expenditure is kind of a non-recurring expenditure. So this is your false statement. Then bad debts written off are considered an operating expense in the profit and loss account. Yes, whenever there is a bad debt means what? See, as a seller, okay, we are doing business as a seller. ठीक है, so we sell goods to whom? To our customers. To our customers. Now customers purchase the goods on credit basis. Credit basis means currently there is no cash transaction. As a customer you have purchased and you said that I will pay after 1 month or 2 months. Okay, so this is what credit transaction. But after 1 month, suppose your customer defaults. Okay, your customer becomes bankrupt, so you cannot receive even a single amount. So in this situation, in your books, you are going to write it as bad debts in your profit and loss account. So this is your again a true statement. Then last is your contingent liabilities are recorded in the balance sheet as actual expenses. Now, contingent liabilities, these are your possible kind of events. You are not 100% sure. Okay, these are possible kind of events. In this, you don't know the exact amount that you need to pay. Though you know the obligation is there. Okay, you know that there is an obligation, like a court case. Okay, suppose there is a court case on you. So though you know there is a liability or obligation you might get, but exactly what are the possibilities of receiving the court case or what amount you are going to pay, that we don't know. So that is what contingent liabilities. So as per your accounting standards, contingent liabilities disclose needs to disclose in your books, but no need to record as actual liabilities. You are never going to write as actual liabilities. Your requirement is to just disclose it. Okay, there is a requirement of just to disclose it. So as per this is again your false statement. Correct? So as per this question, they wanted the correct option. They wanted the correct option. So correct options are your first and third one. Correct? So both first and third. So answer is A. I hope you also got this. Okay, and if you don't know the correct answer, then now I think now you know the correct explanation that why we are saying false and why we are saying true. Sorry. Now coming to the next question. Now this is a very simple and direct question. They can ask for zero point 0.5 marks. Okay, this question is from your schedule 3. So if you know schedule 3, like how to prepare balance sheet and profit and loss account, then easily you can solve it. So question is, current liabilities are those that are due within 6 months, can be paid back after a year, are due within 12 months, and D, cannot be repaid within a year. So generally when we say liabilities, so yeah, let me explain you few things related to liabilities. Generally when we say liabilities, that means you have some obligation, isn't it? You have some obligation on you. Now that obligation can be less than 12 months, or that obligation can be for more than 12 months. In case it is less than 12 months, or you can say within a working capital cycle, you are going to repay it. Okay, within a working capital cycle, you are going to repay it. And this also includes your trade payables. Hana. Or one more condition is there, that you don't have any option to defer. Okay, there is no option to defer. No option to defer. If any of the conditions are satisfied, then you are going to say it is your current liability. What you are going to say, it is your current liabilities. Apart from this, you are going to say all are your long-term liabilities. So your long-term liabilities. So here current liabilities are classified as due within 12 months. So the correct answer is option C. Though under current liabilities, in case of your creditors, okay, in case of creditors, we need to show which are due within 6 months, and which are not, which are going to exceed more than 6 months, but less than 12 months. So this is about current liabilities. Okay. Now, coming to the next question. A company acquires equipment worth 12 lakh, paying rupees 3 lakh in cash and the remaining 9 lakh on credit to be settled in the next financial year. How will this transaction impact the balance sheet? Now in this question, they have given you one transaction. Okay, so basically, as a company, they have acquired one equipment. They have purchased one equipment for rupees 12 lakhs. Okay, and for 12 lakhs equipment, they paid cash. Because in a transaction, there is one debit and credit. Hana, if someone is giving you something, then you need to give back also something. Then only you are going to say that your transaction is completed. Hana, then only we are going to record in our books. That's why we always say there is a dual transactions. So you need to pay cash. That is your 3 lakhs. That is your 3 lakhs. And remaining, you are going to settle in your next financial year. That is 9 lakhs. Means for 9 lakhs, you have taken credit. Okay. On spot, you have paid, suppose, down payment of 3 lakhs, and for remaining 9 lakhs, you have taken an obligation that you will be paying in the next upcoming year. Now you need to identify how this will impact your balance sheet. A, your total assets increase by 12 lakhs and total liabilities increase by 12 lakhs. B, total assets increases by 9 lakh and total liabilities increase by 9 lakhs. Or C, the total assets increase by 3 lakh and total liabilities increase by 12 lakhs. Okay, so basically, if you see, if I prepare a balance sheet, let's take an extract of balance sheet. This is your capital plus liabilities. This is your assets. On your asset side, you are going to show your equipment, isn't it? For 12 lakhs. And for 12 lakhs, you have paid cash down payment instantly. So, what is your net asset? That is your 9 lakhs. Okay. And on your capital and liability side, you have taken a obligation liability of 9 lakh. So basically, you can see on both these sides, you can tally with 9 lakh. So your final impact on your balance sheet is what? Total assets. This is about your total assets. And this 9 lakh is what? This 9 lakh is your total asset. This is your total liability. Remaining things being constant. Now we are assuming remaining things going to be constant. So total assets increased by 9 lakhs, of course, because for 12 lakhs machine you have acquired, but for that you have also paid cash. है ना? So your total asset will increase by 9 lakh. And simultaneously on your liability side, you can see your total liabilities increase by 9 lakhs. So the correct answer is option B. Remember, these type of questions can only be solved if you have confidence on your balance sheet equation. So balance sheet equation is what? That is asset equal to liabilities plus capital. If you know this, then this type of questions are very easy for you. Remember this. Okay. So I hope everyone got this answer. Asset equal to liabilities plus. Just give me a moment. liabilities plus capital. Correct? Chalo. Now, coming to next question. Everyone try this. A business has assets of 1 lakh, liabilities of 40,000 and capital of 60,000. Does it satisfy the accounting equation? You have four options. A, yes, because assets equal to liabilities plus capital. B, no, because assets are not equal to liabilities plus capital. C, yes, because capital equal to assets plus liabilities. D, no, because liabilities are greater than your capital. So basically, when they want about accounting equation, they want your balance sheet equation only. Check your balance sheet equation only. That is asset equal to liabilities plus capital. Okay, capital is what? Capital is the amount that your owner brings into the business. Liabilities are that amount in which you have the obligation. Like when you take bank loan, Hana, when you take your when you take borrowings from your friends. So that is what liabilities. Assets, like you have sofa, you have vehicles, you have home, you have land, you have gold, you have silver. So these are your assets. So they want whether your balance sheet equation is a satisfied one or not. So in this, if you see assets are equal to 1 lakh, correct, and liabilities you have around 40,000 plus capital you have around 60,000. So your assets 1 lakh equal to 1 lakh liability side means your balance sheet equation satisfies. So the answer is option A. Yes, because assets are equal to liabilities plus capital. So the correct answer is option A. Remember, if in exam they are going to ask this type of a question, they are for sure they are going to ask for 2 marks. These type of questions they are asking for 2 marks. Okay. Now, next, which of the following statements are correct regarding the submission and publication requirements of banking company accounts? Now, this question is from your module B, from the unit financial accounts as per your uh, schedule 3 of Banking Regulation Act. So you have four options. You need to identify which one is the correct option. So the first option is, as per section 31 of the Banking Regulation Act, banks must submit 3 copies of the balance sheet and P&L account to RBI within 6 months from the end of the financial period. This is the first option. Then next you have, as per section 32 of the banking uh, and all non-banking companies must submit 3 copies of their annual accounts and auditor's report to the registrar of companies. C. As per Rule 15 of the Banking Regulation Companies Rules 1949, banking companies must submit and publish their accounts and auditor's report in a newspaper within 6 months from the end of the period. The RBI has no authority to extend the submission deadline for banks under Section 31. So, as per Banking Regulation Act, we need to follow few sections. Okay, whenever you are preparing final accounts of any banking company, we need to comply with so many sections as per Banking Regulation Act 1949. In that, we have section 31 and 32, which talks about submission of accounts. Okay, so the first thing you need to note about RBI. Okay, so in case of RBI, you need to submit 3 copies of balance sheet and P&L account. 3 copies of your balance sheet, P&L account, ठीक है, along with your auditor's report to the Reserve Bank of India within 3 months from the end of the period, ठीक है. And if RBI wants to extend because you are not ready to submit within 3 months from the end of financial year, then with the permission from RBI, you can extend for next 3 months. That is what section 31 talks about related to RBI. ठीक है. Under this, you need to submit 3 copies of what? Of your balance sheet plus your profit and loss account. ठीक है. This is a financial year. From the end of financial year, generally you receive 3 months. You receive 3 months. But with the permission of RBI, you can further extend up to 3 months. That is what section 31. Okay, now section 32. Now, as per this, you need to furnish 3 copies again of annual accounts, auditor's report. To whom? To ROC, Registrar of Companies. Now you need to submit 3 copies. Okay, 3 copies of what? 3 copies of your annual accounts plus auditor's report. Okay, so at like the same. So you have 3 months time period. Okay, like we are submitting to RBI, na? Like the same we have under this section 32. Now section 32 talks about RBI. Section 31 talks about how to submit to your RBI. Section 31 talks about like how you can submit to RBI. And section 32 talks about how you can submit your documents with ROC. And one more, we have rule under this. That is your Rule 50 of the Banking Regulating Rules 1949. As per that, your accounts and your auditor's report that needs to be published in a newspaper, in a newspaper which circulates in your banking company's principal office. So you can not um, on every branch. There is no requirement like you need to submit for every branch or you need to circulate everywhere. Okay, just you need to circulate. Just you need to circulate in a principal office of your bank. And you have 6 months time period from the date of uh, your financial year end. So this is about the publication of accounts. Okay, within 6 months you need to publish in a local newspaper which is circulating in a PO, in your principal office of your banking company. So that is about publication of accounts. So now let's read the options again. As per section 31 of the Banking Regulation Act, banks must submit 3 copies of the balance sheet and P&L account to RBI within 6 months from the end of the financial period. No, this is wrong. This is not correct. Directly you are not receiving 6 months. No. First you are going to receive 3 months. First you are going to receive 3 months. If within this 3 months you are not submitting, then you can take the permission from RBI and then you can extend further 3 months. That is how 6 months are allotted to you. Then 3 months with the help of RBI permission only you can extend. Then only you have 6 months. Otherwise, generally you have only 3 months. So this option is your wrong. Now, next, as per section 32. Okay, now as per section 32, all banking and non-banking companies must submit 3 copies of their annual accounts and auditor's report to the ROC. You might be thinking, this is again correct, but answer is no. Why this is not a correct option? Now let me tell you. See, if you read section 32, read the second paragraph, over here they have said as requires a banking company. Okay, requires a banking company, but not other types of bank. In this, The act applies to banking company and not other types of banking companies. Okay? So that is why this is again a wrong statement, or you can say a false statement. Then coming to the next, that is your third option. As per Rule 15 of the Banking Regulation 1949, banking companies must publish their accounts and audited reports in a newspaper within 6 months from the end of the period. Huh. This is true. Whatever they are saying, this is true. Correct? And the last option, RBI has no authority to extend the submission of deadline for banks under Rule 31. No. In this, RBI has only the authority to extend any uh, submission of documents deadline. So again, your last D option is your wrong option. So the correct answer is option C. Okay, chalo. Now coming to the next question. A company purchases machinery worth 10 lakhs. It pays 2 lakhs in cash while the remaining 8 lakhs is taken on credit. You need to identify which type of activity you are going to record under cash flow statement. So basically under cash flow statement, we have three activities. We have operating, we have investing, and then we have financing. Correct? So here you are purchasing machinery. So machinery is a kind of a investing activity. So whatever amount you are paying through a cash, that you are going to record in your investing activity. Okay? So when you are purchasing anything for cash related to investing activity, you're going to record in your investing activity only. So the correct answer is option B. Now, which of the following income is exempt under section 10 of the Income Tax Act? Salary, agricultural income, business income, capital gains. So the correct answer is option B. On salary income, like you all are earning salary, you are paying tax. If you ever start your business, in that also you need to pay tax. If you sell your shares, house, land, whatever gain you are getting, on that also we are paying capital gain tax. But on agricultural income, we get the exemption as per section 10. Okay, now next. Which of the following is not a direct tax? Income tax, goods and services tax, corporate tax, capital gains tax. So income tax is also your direct tax. Okay, so this is not your correct answer. Corporate tax applicable on companies. Capital gain in case of shares, mutual funds, land, building. When you are selling assets, at that time you are getting capital gains tax. So GST is not your direct tax, it is your indirect tax. So with this, we complete today's Raftar series. But yes, let me tell you one very important thing, that if you're planning for upcoming May 2025 exam for JIB, then this is your last conceptual batch. Okay, this is your last conceptual batch in which you are going to receive live plus recordings, live plus recorded videos. Okay, and along with this, you are going to receive live online classes, mock test, ebooks, and as per latest pattern, we are delivering our content. And if you use mobile phone, you can watch this lectures over there. If you want to use laptop, desktop, anywhere, this is the perfect type of device uh, acceptability under this batch we have. Okay, so whatever platform you want to use, you can use it. And if you purchase it today, you can see you need to pay 20,199. Correct? But if you use the coupon code, that is Y895, you are going to receive maximum discount. Remember, this discount reaches up to 80% off. Yes, with the help of this coupon code, you can get up to 80% off. So please enroll it fast, because we started this batch on 8th March only. And your timings are your morning 6 to 9 and evening 6 to 11 p.m. So this is about your selection batch. Now, one more very good information for each and every banker, that on 23rd March we are coming to Kolkata. So if you are a banker and you live nearby Kolkata and you want to know about JIB, CIB, or even bank promotion exams, you want to know about the exam strategies, how you can manage your time, you want to know what are the other options as a banker you have, and apart from this, you get the chance to make networks with your senior bankers, with the experts. Correct? So I think these type of bankers conferences only can make our network strong and stronger. Correct? Day by day. So this is your Google form. You need to scan this QR code and you need to fill this Google form. So with this, now let's wind up this session. If you want any other information related to bankers conference, you can ask me through the comment section also. Chaliye. So now with this, now I'm winding up this session. Thank you everyone for joining. Take care and bye bye.